Thank you, Josh, Paul, all the folks at Trader Kingdom and Ninja Trader. I can tell you guys firsthand that as a private, or whatever they call it, closed beta 8 for Ninja Trader, I am very impressed with the new cloud-based software. Don't send me emails. Please ask me when they're released because I have no idea. But it's great software. So welcome everyone today. Today's the 22nd of September. Last couple of months have been wild to say the least. Welcome to Market Profile, and the footprint charts are so powerful. We're going to show you in spades over the last month or two, if you are new to the concept of auction market theory, how powerful these tools have been. So I've got 16 slides. I want to try and go through these in about 20 minutes. So I'm going to go kind of fast. So I highly suggest, as I do to all students, to take a look through the video as many times as necessary. It will also be up on my YouTube channel. So I get a lot of questions from folks going, "Hey Steve, who are you?" And let me just show briefly the website. Jump back to, this is the home page. If you guys are curious as to my bio, and you can just scroll down to the bottom of the page, click on my bio, follow me on Twitter, Facebook, all that fun stuff. This is the YouTube channel. I highly suggest taking a look at this. At about 20,000 views so far. It's actually a lot of good people with YouTube channels on, as some of my colleagues that teach this, especially FT71. So you can take a look at all the videos. They're very different as this particular video. They follow in a very different format. So, but the disclosure today, we'll go ahead and get started on our 16 slides and then get into some live charts. Risk of loss in trading futures commodities can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. And keep in mind, guys, that this is a disclaimer, albeit the attorneys love it. It's actually really good stuff, because I've seen a lot of traders blow out accounts over the years because they have not put the time into learning the concepts. So what we're going to talk about today, as far as the biggest picture, is understanding context. It is so critical to being able to trade correctly and to be able to frame what's going on in the market. Okay, so is a whole bunch of emails I got on the course. This is the course here. It's 20% off till Sunday night. It's actually a really good course. I've had about 150 students go through it the last 2 years. You can click on check it out for yourself. So with that being said, let's get into this. After my shameless self-promotion, let's go through the overview. So we're going to talk a little bit about market profile and the footprint. What is it? How's it track order flow? Why does it give you an edge? I do understand that many of you have seen some of the intro to this stuff before. That's why I'm going to try and glaze through this in 20 minutes. So if I'm going too fast for some of you, this concept's new, please take my apologies, and I highly suggest that you read some of Jim Dalton's books. You can Google him or Amazon. He's written 2 books, Mind Over Markets and Markets and Profile, are both equally as good. Mind Over Markets 2007, a little more updated. So with that being the background, let's get into a little bit more of the overview. So the profile and the footprint chart, we're going to go through some live examples. I'll jump into the actual software. No, I cannot show Ninja Trader Beta 8, but I highly suggest for either Ninja Trader 7 or if the Beta 8 is released sometime soon, you guys can actually get a footprint plugin for that software called Jigsaw. It's Peter Davies' company. It's actually a really good plugin. Since I'll be a member of the Ninja Trader ecosystem coming up here real soon, I may have an actual webinar on running the footprint in Jigsaw once 8's released. So, but I'll go through the footprint. Really the goal here is, while you're observing the footprint, is to determine whether trading activity is drying up, being facilitated, or increasing at pace of one form of price extreme or another. Okay, let me double check here. All right, cool. So let me just double check this last announcement. So if just so everybody's crystal clear, including me, NinjaTrader 8 beta was opened on Monday. So anyone can download it now, okay? So bonus, today we're going to talk a little about the volume and balance indicators. This is a little built-in algo that is part of the footprint system for Market Delta, so you can actually have your own order imbalance. The key thing is we'll go through some of the live examples of the order imbalance. So third and final, why market profile. Footprint charts play a critical role in the 7 steps to consistent profitability. For everyone that is not consistently profitable, I highly suggest you all find a mentor and be an absolute sponge. You know, I got my start in '96 as a trader and an options trader for Fidelity Investments parent company, which is FMR in Boston. I was lucky enough through the course of many years at Fidelity as an analyst and a portfolio manager to trade for a lot of the big executives. And I saw the trading in futures markets was really the way to go. Decided to leave the 2 previous firms I worked for and start my own fund. But most fortunate in how this is relevant to this discussion is I found a mentor. I'm in New York City and we're starting up our fund. We actually had a lot of common with BMW Motorsport at the time, but a Goldman Sachs futures trader was actually a market profile and a tape reading footprint expert. He introduced me to the concept. He mentored me through many years of '06 through '08 when I was first learning this concept, and I was floored that you could gain this much insight into what's truly going on instead of watching a time and sales tape just rip by, and regardless of filters you may have in, you can't see really what's going on. So we'll be able to do that, and most importantly is that hopefully it'll give everyone watching this, or however many times it takes to watch this, it'll empower you with the ability to understand context, okay? So with that being said, let's talk just briefly. I'm not gonna read all this stuff, so I'm just gonna glaze real quick through this, and we'll go into some market profile, and we can jump into the software, which will show us what went on today. So if you're not familiar with market profile, really the objective is to show traders where value is being established, a value area high or a value area low. This is where most of the trading is taking place. So one of the best things about the value area is the bell-shaped curve you oftentimes will see, and I'll show you in a couple of slides as well, to see where the meat, if you will, of the volume is being executed. That is critical to understanding big picture context. So whether you're looking at a profile on a daytime, a week, or a month, I'll show all 3. And you know, some are condensed, some are larger, but it's going to give you a better feel for what's been going on. We all know that the market spent a whole bunch of time over the last 16 months, you know, bouncing underneath and correcting, then coming back, not really truly getting able to rally out, and then we just absolutely cratered into the 1933 area. So I'll show a lot of that on both the composite, so we can see the high and low volume nodes you guys have maybe heard in the past. But the big takeaways from market profile is you want to find out where the responsive trade is coming, okay? So there's a whole bunch of scenarios. You guys can certainly read this at your leisure. And by the way, on the last slide, before I forget, is going to be my email. So if you guys have any questions on any of this, more importantly, if you want the slides from today, I saved them to a PDF, about 16 slides, and I'll email them to you. So, but you have to send me an email to ask for the slides. And, you know, I'll be doing that probably for, let's just say, the next 2 weeks is a window, okay? Because I'm not going to read all this stuff. So the key thing with any type of responsive or initiative selling is the difference between whether it is other time frame players stepping into the market to try and take us out of a particular balance area we've been in, or if it is just response as far as initiative above that in any buying, market drops back down into the range, zigzags or bounces, if you will, within that range. The initiative or the trend type day volume is the most important thing to recognize in market profile the difference between the two. Now, it'd easily take me an hour just to explain the difference between the two, but just know that that is the primary goal of understanding market profile. It's to frame the market, to be able to look inside that frame and see what is going on in the auctioning process. And that is being able to determine what players, if any, are active. Now, obviously, looking at the last month, other time frame players have been absolutely active, and they have thrown this market into a tailspin. Yes, the algos have been going nuts, and but there's been a lot of volume, and it's great. But more than ever, traders absolutely have to be prepared as far as using the right tools like these two that we're going to talk about to gain the context and the big picture of what's going on in the market. Critical to the understanding of the auctioning process. So we've seen a lot of initiative selling over the course of the last 3 weeks that we've just sailed down into this area. So these are the different scenarios. There's a lot more than just 5, but these are the basic ones. So market opens in scenario 1 above the value area. In this particular case, let's just say it's the value area of yesterday. Okay, it's just not something that took place today, but I'll go through and analyze what went on today so you can put all this stuff in experience with what's going on. But the market opens above it, and is able to hold the value area high. Thus, potentially initiative buying is coming in above this area. So if it trades within this value area, falls back down in, you have anywhere between a 68% rule, which has stats that are nowhere near as good as that, that says that we could traverse the entire value area if we spend enough time above the value area high, break into the value area, and then given what the context has been every time we broke into that value area from the previous 4 or 5 days or more, tells us what the context of what potentially could happen if we break back inside the value area. So whereas in scenario 2, same thing, market opens above the value area, but then begins to trade for 2 or more consecutive brackets. In my case, my brackets start off with D bracket. Bracket's nothing more than a 30-minute candle, folks, but it's broken down into a time price opportunity, and it's looked at in an actual alphabetic letter value. Okay, so then you just reverse the first 2 scenarios, and you come up with the next 2. So same thing. What's the market going to do? Is it going to bounce inside of a given range or the value area? Is it going to break below it and possibly see initiative selling come into the marketplace? Again, a lot of those other big time frame players. Or is it just going to trade within, like scenario 5? So that's just maybe enough to be dangerous on market profile. Let's take a look at the software now. Okay. Okay, here's the profile for today. This is the session 2 DTNIQ feed data showing what took place today. So it's only New York, what they call day session trading time. Okay, so if you split the charts out, you can see in 30-minute bars, right? So if you just want to view this in a 30-minute candle, this is how today looks. Okay, a lot of times it's easier for folks when they're seeing the profile for the first time to split out the charts. So as you can see, we opened in D bracket, right? So for the first hour, 9:30 to 10:30 New York time, Eastern time, we're auctioning to build the red bar. This is the initial balance, okay? When we move over, anytime there's a O or a 0, whatever you want to call it, that's where we're starting off the opening print of the next bar. And then we will either rotate her up to form the initial balance. You can see that once that's formed, we open up F bracket coming into the noon hour in New York. We broke both below that, and then we dropped significantly from that point. Now, in the context of the ridiculous volatility that we've had over the last 3 weeks, this is not that much of a drop, right? But what it's telling us is that if you look at the previous days, as you can see over here in this area, I'm circling it here. I'm not going to bring the drawing tools out. I'll just circle. It's easier not to erase anything. So in this particular area, you can see how we formed a pretty solid on the way up naked POC or NPOC on both a volume red bar and or the TPO red bar and the volume brown bar kind of mixed together here. But this is for this particular day. This becomes an important point, and it did hold us as we dropped down. So when you're looking at the markets from the standpoint of a profile, you can see here we had double TPOs on the low, and there's so many nuances that I can talk ad nauseum about on this, and that's why I encourage you to watch another video of mine on YouTube if you wish, or dig deeper into it with the CBOT's market profile, which is like a 394-page study. You can read any of Dalton's books. He's got an excellent YouTube channel as well. Give you much more, and Dr. Kepler does too, by the way, guys. So much more comprehensive overview beyond just me touching on the surface here. But just in the interest of time, this is the profile. So there's a lot you can glean from the profile. And if I condense this down, and maybe hard to see, I know the screen doesn't refresh as quick, so I'll go a little slower. But with you can see how we just dropped down, and the markets really paid very good attention and really have seen a lot of the movement off of the big levels that were built in the profile. Now, just to take the discussion a little bit further, there's just the volume you're seeing from the 24th of August to now as far as the profile. You can see that I expand the volume out greatly on the current day. But it's maybe not as easy to see the volume that's built inside the profile. This is the actual volume of executed orders as a aggregate volume inside there. But it's it's very helpful to frame what's going on. There also is significant volume and significant profiles from much further back that can become just as important. But you can switch the profile to anything. You can look at it in a weekly, which is right here. You can look at it in a monthly. Okay, so this is a monthly profile. Again, I'm just going to make this smaller, so for the purposes of just showing broadly what's going on, you can see how we spent many months, bouncing back and forth. This data cuts back to the 15th. We can actually go back almost 3,000 individual days with my data from DTN. So looking at, it just tells you a lot. There's a ton to be taken from what's going on with these different types of auctionings. And so it's purposeful for that. So get out of this, drop this back down. All right, let's talk about the footprint next. And this is a 5-tick reversal. So, as you can see from the time at the bottom, we're only going to be able to go back and see this from approximately 3 o'clock, but I'll squeeze it in here. But we'll go ahead and talk about this because this is really what I like to call a fine tuner of the execution. So if we jump back to PowerPoint, footprint, what's the benefits of a bid-ask footprint? It tracks order flow in the aggregate. So essentially combining price with total volume, and it gives accuracy for and transparency of seeing what's going on. So notice it is sensitive to whatever you set it up. Most prefer some sort of tick reversal, a point and figure. Mine is a 5 PNF. I often get asked why that. You can use any time frame you want, but I feel that either a 4, 5, or 6, in some cases even a 7 with all the volatility we've had recently, price, point, and figure, it's basically showing you that if we can't get a 5 or 6 tick reversal, whatever time frame you set up on reversal, that's telling us a lot about the power of that particular move. Okay, so the bottom line of all this is that you can execute with greater precision, gain confidence, filter the noise, right? Time and sales, think all that stuff flying by the time and sales screen in the past, right? And looking at the volume in the aggregate. So improved transparency and overall better understanding of context are the important things. So I get a lot of questions on order flow, okay? I really feel that this is the missing link for many traders, and essentially refers just to, you guys can read this, how orders are coming into the market, how they're being filled, whether executing at the offer on the bid. It's the dual action at the most micro level. I like to call that fine tuner, which you'll hear in some of my other videos. So assessing order flow in real time can tell traders how the trade is being facilitated in any direction. Just think initiative versus responsive move. Okay. Key concept in AMT. Order flow patterns is revealed by any footprint chart. Again, it's just market delta. The Jigsaw plugin is just as good. It actually expands out a lot of other stuff. They're not traditional price patterns. So they're time and sales patterns. So traditional TNS Windows data simply does not this really diverges radically from traditional price patterns and or indicator-based analysis. So, and by the way, while we're going through this, if you guys came in late and you didn't hear from Josh, let me just jump back to that window. Feel free to ask questions as we roll through, and I'll start clicking on some of these questions as we get a little closer to the 5 o'clock hour. I want to try and keep this webinar to maybe 45 minutes, maybe 50 minutes, keep it tight. So that's order flow. So the market profile, the support and resistance analysis, trend lines, and other macro big picture stuff, Fibonacci's, I mean, you can go on and on, fractals, is really sort of the big picture analysis, in my opinion. That's sort of the where to trade. And the footprint excels in really, you guys have seen all this, and we're just going to skip to this. So here's the bottom line. So what is the footprint? These are some older pictures. It doesn't matter the date. It doesn't matter the price. And heck, it doesn't even matter whatever futures contract or Forex instrument that you're using. The key thing is that the footprint works best on an aggregated market. This is why I far prefer trading futures over Forex, not just because of the tax advantages, it's because the CME, it's an aggregated order and a volume. So it's not being fragmented with a lot of what you see in Forex land. That's why I prefer trading the currency futures contracts or oil or any of the ES, DAX, NQ, YMs than I do trading the actual Forex pairs. Just my opinion. So, because the footprint doesn't really work in Forex land. So looking at easy to spot patterns, okay? Really the key thing is any time up or down a move stops where you don't have a zero by something or something by zero, it's an incomplete auction, okay? Even though the volume and the move, which you've seen a ton of examples of the last couple days I can show you guys, even though the volume has been strong in some of these bars, buyers are really unable to push past this level. You can actually see this on the footprint. So it's really just due to a greater number of sell orders than it is buy, obviously. But the drying up in volume, that I'm actually going to show you a live example of this very thing today. A drying up in volume and a subsequent reversal, which we saw today, could actually quite clearly be seen on the footprint, both the up and at the bottom today of the market, right around 1916.75. We actually saw the same thing. What makes this particular pattern even more powerful is if this pattern is a rocket in one direction or another, meaning that there has just been a huge move, there's been a big volume up bar, and it can be, and oftentimes, which is certainly the case recently, exhaustive moves for that particular short-term time frame. So it's an exhaustive, what I like to call an explosive move, sort of exhausts itself out, maybe an incomplete auction showing up at the top like you're seeing here, and then subsequent tests of that area show no order flow going off. Now, a lot of people will say, okay, great, I'm a beginner at this, Steve, and hey, this sounds all great. So basically, do I take the short right here? No, you don't. Okay, again, this is just the fine tuner of when to execute the trade. There's a whole pile of other things that need to be a confluence. You know, let's say this is the 36 level, which really held us most of the day today. You know, yes, because it's more of an extreme look as far as an extreme of the value area highs or lows of either a time or a volume based count from the market profile chart. So let's look at another example. Okay, so in hindsight here, maybe it'd have been best for me to show 4 or 5 other bars before this, but we had an exhaustive move up into this area. Okay, we had a test of the high, nothing going off on the order flow at the top, and 2 sell side imbalances. See this right here? Maybe hard to see on the screen, but if you look, it's blue versus red, 12 by 238, 32 by 348. That's telling us that there's a imbalance. Now, it's hard to determine the imbalance, but I've set mine at 400%. So anytime I see this twice up against an area which got a lot of other confluence, or there's a whole other bunch of high and low volume nodes that have come across, and let's just say this is the 1700 area in the past, okay, I'll probably take a crack at this short. Bunch of other factors, but you know, I'm going to show you some examples live today of why this took place. So essentially, just knowing that no order flow is going off, it's an alert, it's a bell ring. Does it mean you get short? No, but it does mean that we may have another rotation back down, in which case we did. So we had a big flush. This is a good example of a exhaustive move. Now it had cooled itself back out. Yes, we popped back up. Probably got down near to some pretty heavy sell outside of Bollinger Band type or any standard deviation extension. So normally you'll have a little bit of a snapback as we did. But one thing that somebody pointed out last webinar that I ran, which was over a year ago, by the way, that yes, this is an incomplete auction right here. And notice that that was actually somewhat of a magnet for price to come back to it again. Didn't quite get there. But this is just a beautiful example of a short setup, okay? With over a 10-to-1 sell side imbalance, just boom, hit that right at the top of that bar, okay? And I'll show you again some live examples, but I want you guys just to see some slides I pulled from the past and how it's showing up on the chart. All right, so I don't like that example. Let's go to this next one. Here's a good one. So this is a while ago, but it was a liftoff. You could see that through the course of this exhaustive bar, we had a number of buy imbalances just ripping through it. Right after the exhaustion on the previous bar of a lot of selling volume, you can see how the delta for the day changed. This is this top line net number. It's cumulative for the day, so it's always changing depending on the volume that comes in. We had a rip, had a number of buy side imbalances that hit. This always keeps me a little weary. If I see a lot of these show up in a bar that just has lift off or sell off, conversely, if it was a bunch of red down, I'm usually a little concerned if it's into an area that's a big low or high volume node on a long-term composite chart. I may take a crack at it because we did have a pretty decent sell hit. But notice the rotations weren't that much. I mean, barely got a 5-tick reversal, thus forming the next bar as soon as we came back up to just above the 94 area. And notice every time we popped back up, we had those sells, but we weren't rotating back down. Why? Because look at in some cases, almost a skipped print, right? This tells me, at least at this point, can't gauge the power of it because I've forgotten a lot about this particular day's pattern. But obviously, another time frame player stepped in and just started lifting, and the market just lifted off from that. So as we, and if you're wondering what that beeping is in the background, my data is updating. So looking through this rip, consequently, a couple of the sell side imbalances that hit the top and the rotations back. Now, here's one thing that's interesting. So we come back down to, which I guess you certainly could draw a line at the 1696. This actually was a very big low volume node at the time on a long-term composite. So we pushed with pretty decent volume, got above it, went positive on Delta for the day. Keep in mind, guys, I'm just walking you through this. I don't expect you guys to fully understand this at this point, but many, many examples are beginning to give you guys an idea of how critical this tool is. So we had a sell side imbalance literally capping the tops of almost these 5 bars, but yet no large rotations down. But I'm already on a high alert for the fact that there really isn't any. And sure enough, 3 times we came down here, we had a pretty significant buy side imbalance. Just looking at the algo showing up right here telling us that, just comparing essentially bids to offers through the 1696 pullback. And then we lift it up again. Now, for the scalpers, okay, again, I'm not a scalper, used to be, don't really do it anymore. I'd rather put a trade or 2 on a day and just let them ride through whatever roll I can get out of it, taking scales off along the way. But you can actually use this tool to scalp. So you'd see that while we pulled back to 96, 3 times maybe a charm, right? That possibly another leg up was coming, and you could have rode it up for a few points. Here's another example. Possible exhaustion print, 0 by 18. Anytime you see a big number, okay, we're 4 digits wide, we want to see lower highs on this. So those are the slides, and let's jump into the live software just so we can see what took place. I'm actually going to scroll back, so bear with me a second here to what went on here. How this would have helped us out. So let's go to low of the day. You know what? Let me just jump back here. See how we had, there was no sell side imbalance up here, but coming into the 1930, which was important, see how a little sell side came back up, really nothing going off on this, but then see, you guys aren't seeing this print real time, but I guess I could switch to the crosshairs, but let's just look at the 446 versus the 1855 relation here. This is a little bit of a heads up that if we can't get back up to this area again, we're probably going to sell off. Okay, boom, came back up to it twice. 2 sell side imbalances, 1 of 2, none with the exception of this one of real significant. I always like to say I'm looking for a 4 to 1 or higher, but I'm not going to take a trade on a 4 to 1. Or if I see like a 10 to 1 of something big, or if there's a large exhaustion bar before that, like you're seeing here at the 1203, 5 tick bar. Actually, I got it on 6 ticks right now. So 6 tick bar. This is a high alert for a short. And I actually did take the short and it paid off nice. So came back up against this area again. See how we're still, didn't get much off of this. Because I was looking for a bigger move, so maybe I think I grabbed 3 points or some small contract size, so I didn't have a lot to leave on as runners. But as we came back up against the 27 area, sure enough, boom. So notice down here, big exhaustive move, okay? Took us almost double the delta for the day. Let me just drop this window down here. Took us for almost half the delta for the day. And let me get rid of this indicator. You can see this a little bit better. I'd be darn near, especially since the significance of the 14 to 16 area, I'd be on alert right now to flip this and potentially go long. Again, incomplete auction at the bottom. See that? 1933 by 444, incomplete auction. Does that mean we're going to come right back down immediately? No, but you're on alert that if we're coming into a big area of the, actually a very low volume node on the composite, which I'm going to show you last. You're probably sick of hearing that. But it attracted us back down to that area. So as we moved into there, just getting kind of choppy. Not much to really read in the rest of this, but you can see how this is really helping. At least I hope you can see how this is really helping. Look at that, another incomplete auction down there, 1327 today on the time, right down in 18. It's telling me that maybe we, I mean, it's turning into a bit of a chop fest, but as far as getting down to the real low of the day here on 17, let me just drop back to that and see if I can find what I want to see at the top. Okay, so right here at the top, let me see if I can just expand this out so it's a little easier to see. All right, so at the high here, it's a pretty important high. See, we had a 10-to-1 sell side imbalance. So you could have taken a crack at there, especially we were coming into higher and a whole bunch of other stuff and as far as areas of confluence, including the profile. But we came back up to it again. Notice nothing went off. Very little, 3 contracts essentially were executed. So another chance essentially to take a shot at that for, as we saw throughout the day, what the trend was down, right? So if we're trading with the trend, we want to see a nice zip up and potentially this along with some other areas of confluence in order to try and continue to get that rotation back down. So, all right, we're 50 minutes into this, and let me take some questions. And again, guys, if you have certain levels of confusion around this, I would, that's actually quite normal. I don't expect you guys to learn this in one session. All right, let's take a look at some questions here. What relation does a market profile chart have with a volume profile chart? The market profile chart is really, as you're seeing here, it's where I start off the day. So probably, as far as the homework sheet, you guys have a link to. I'm not going to open up and go through the homework sheet, but I'll tell you how my day works. So I come in, hopefully I'm well rested, and my mind's focused on trading. Sort of that Zen thing I always like to try and do as far as meditation or some sort of yoga in the morning before I trade. I'll usually come in and I'll take a look at the composite first. So this is the composite. I want to see what's going on as far as the market. Okay, this is a day, session 2. I want to see where the high and low volume nodes are. This is all the business that has transacted in this area since the 9th of October 2013. So approximately 2 years ago of 1 minute data that we're looking at on this chart. This is the first thing I look at. I want to see where are the important areas. And I had somebody ask me the other day, why did the market stop at 1821? No surprise. Why is that on, essentially crash day, right? Why do we stop right in this area? Look how huge this peak is. It's the biggest. And that's why the market stopped, because there was so much business that transacted over the last 2 years at this level that a lot of the other time frame players, especially the long ones, and those that are short maybe covering or wanting to put cash to work, they're going to defend this position. This is one of those trades where you just step in and buy. because it's a very big area. Okay, so we bounced off that, essentially formed a little triangle. You guys can see us forming here. So I'll go through and look at this. I want to understand context. Okay, then maybe I'll take a look at the monthly profile, find out what's going on from just a time. Okay, again, this is the relation of time spent versus volume. Okay, comparing these two. Again, all part of the exhaustive amount of homework I think you should be doing, prepping for each day. But once you guys start ripping through this, you can knock it out pretty quick. You can do it about maybe 10 or 20 minutes. Or you can do it the night before. Sometimes I'll print this stuff out and just put them on the nightstand, study it as I'm falling asleep to some goofball television show. So the market profile chart and the long-term composite, and then I will move to the day chart. You can even take a look at the week, but just in the interest of time here, take a look at the day chart. What's going on? You can condense this down using the preferences all the way to a single point if you want, or you could just hold it on the scale. What's going on? Where are all the naked POCs? Where's the business being done from the standpoint of the blue or red lines? Brown or red? Looking kind of blue. The brown or red lines on the chart. Hopefully that answers your question. Let's jump to the next one. Next question is the value areas. This is from Robert M. The value areas from the prior day, prior session. They are in, just make sure I got that clear if I skipped over that. The value areas are designated by the magenta bar. This is for yesterday on the 21st. See the magenta bar? And the brown bar, maybe this is hard to see, is volume. So the volume value area high, which just is important to me. I don't hold one value area any better than another. I want to weigh both of them the same. If anything, especially if we spend a lot of time in one area, I maybe give it a little more weight. Whereas if we're just ripping through stuff, I'm going to be paying more attention to those high and low volume nodes than I am just yesterday's value area high or low. Why? Because this market has amnesia from day to day. So you really have to have a focus on the long-term context of what's going on in the big picture charts. Again, the composite. All right, next question. And again, you guys can always send these questions to me. Jim, yeah, I have an actual track record. In Bill L, this system is available in Ninja. It's called Jigsaw. It's a plugin for Ninja. And obviously Ninja has their own market profile, but as far as the footprint, it's called Jigsaw, and it's a plugin. Yeah, I have a track record, Jim. If you want, you can email me for any of that. I don't send my track record out, so if you're looking for that, that's not something that's going to be emailed to you. Bid and asks are ever in the same line. This is always on tick. I'm not really sure the question, Peter. Maybe if you could re-ask that. Yeah, Bill, you have to email that to me, Bill S., if you could, please. Just email me your address. My inbox serves as, let me just drop that up on the screen here. Go to the last one. That's my email. You guys can call my office too if you have any questions. I'm very old school, guys, so I want to talk everybody through before they purchase the course. It's not for everybody. I find I talk more people out of taking the course than I do going through it because I'm a realist, and if you're not willing to dedicate, as I like to call it, the 10,000 hours to master anything, I could certainly help to cut the learning curve on the course because I've gotten a couple of questions via email on that. But as soup to nuts as the course is, it is not, and nor will it ever take the place of screen time and you know, really learning all this. But yeah, I'll send that to you. Jigsaw has level 2 plugged into it. Yes. What was the average time of your trades? Average time in my trade. Oh boy. Recently or long term? Long term, several hours. Recently, I don't know, 10 seconds to 20 seconds. I mean, you know, if you put enough contract size and you have a big enough account, you know, you can let some of these runners get, you know, 20, 30 points for you, just like they did last October, and now they're going this September, you know, 2 really good volatile periods of time. But typically, in lower volatile periods of time, I have larger contract size on, and I have more patience. So I've cut contract size way down. It's just normal risk management. But I want to hold the trades to get the scales I feel we can get out based on current volatility. I mainly trade the ES, and again, just my 2 cents, guys. All the people that I have coached and mentored, which is about 100 people over the last 2 years approximately, that I've at least been heavily involved with, I recommended to every one of them that they learn trading the ES. I know there's other contracts and instruments, and there's some great stuff and other exchanges, and yes, Eurex is great with the DAX and all that, but this is the largest volume. It is the biggest aggregate. It is the largest futures contract traded on the planet. I'm talking about the ES, the E-mini S&P, has about $100,000 in notional value, and you can trade the darn thing for, you know, anywhere from $4,000 to $5,000 in intraday margin. I don't recommend, or I say $400 to $5,000, which I don't recommend trading an intraday margin at the $400 or $500 level, but you know, certainly want to have about $10,000 or $15,000 of money that you do not need in a futures account, and I stress, do not need to start trading. You know, from 1 to 3 contracts, you know, using whatever execution dome you want. So we go through a lot of that in the course if you guys want to read into it. So let me make sure I'm getting all these questions answered. JW, no, I did not. But once I saw it break and the massive amount of volume and other time frame players that were stepping in once we crossed under the 2040 level, remember, think about how big that level was, right? So if you look at the composite, we go back up towards the high, I mean, how big was this level? It's held us right under 2040, essentially 37 to 40. This has been a big level. It's also one of the highest, the lowest part of the balance area of the entire chunk of the last year, year to date, I should say. But it held us. Once we broke that and we had decisive volume on this break, I knew we were going to flush. I did not know how far we were going to drop. But not a surprise that, yes, this was just a monster volume. It's probably a darn good day to put some long-term money to work, albeit we're probably going to go back down and test this area. It's hard to tell. It seemed to me, and the word on the street among a lot of my trader buddies, is that a number of big funds that were wicked levered. Keep in mind, guys, the leverage is now higher at close to 500% than it ever was at the peak of the market in 2007 and 8. Okay, we have way more leverage on right now, and a lot of the funds that were heavy levered, you know, they basically got margin calls and we flushed. Plus, all the algos went nuts. So, long-winded answer to your question, but it's just so much stuff you can glean from these charts as far as determining whether other time frames stepping in or not. Sorry, guys. When I go to the next question, I have to jump back to this Firefox screen. So, long-term, Bill, about 71% winning trades if you follow our system. And that is only with the huge caveat that you spent significant time going through the course. Significant time. You have mastered it. You can recite this standing on your head after a case of beer type mastery, okay? So, yeah, it's showing more downside, JW. There is a description of the course on the website. Yeah, I'm getting a lot of questions about this course, and we should jump to a shameless plug here. So this is the course. Keep in mind, guys, this course is 20 hours of 2 different classes. So there's 40 hours of 2 full live classes up on the cloud. It's a private Microsoft OneDrive cloud. As soon as you buy it, you get access to the cloud and so forth. But I've been told by many people I could probably charge $3 grand for this course, but I'm trying to pay it forward, and which is the big reason I started this company, because it does take up a lot of time. And let's face it, you know, selling courses and doing webinars and all that really doesn't amount to large income, but it certainly has gotten me exposure in the trading community. It can help as far as raising capital for a new fund we're looking for, or any of that stuff. And that's primarily the goal of doing this, and pay it forward. So we're right on 24 after the hour. If you guys don't have any more questions, let's cut it there, and you know, try and keep this under an hour. Anybody got any other questions on anything? Make sure I got all these questions answered. So I got that, answered that. Risk reward is, if you want, JW, you can send me an email on that. That risk reward question, that's going to require major explanation. Yes, it's being recorded, Bill. It'll be up on my YouTube channel. Did I miss anybody's question? I think I got them all. I think I got them all, Josh. You think I missed anything? Yeah, watch the videos on the YouTube channel. Yeah, you're welcome, guys. Dr. Kepler. Okay, write this down if you need to. Dr. Kepler. Forget the spelling. It's Kepler. Guy's really good. Market profile teacher. FT71, futures trader. He's Morad. He's got him on stage 5. Problem is, none of these guys have courses, but they teach a lot on, have a really good YouTube channel. So you can see all that. You can watch stuff on my YouTube channel as well. A lot of videos on this stuff. But it takes time, guys. You know, my most successful student probably makes about 500 grand a year. Guy's killing it. He's trading CL, and man, I keep wanting to have him on here, but he doesn't give a rat's ass about talking about how successful he is. So I mean, it can be done, but I mean, I got to tell you, Andrew is putting monster time into this. He's probably put 9,000 hours into mastering this craft over the course of, became student in 10, since 2010. So, I mean, this kid has just absolutely locked himself in his house for about a year going through all this. So it can be done if you genuinely have the desire to do this. And I'll leave it at that. Do you recommend Dr. Kepler over Jim Dalton? Tom Alexander is really good too. I like Dalton. I really do. Problem is, Jim will put you to sleep. So, but you know, it's the key. So perseverance and capital preservation. All right, guys, I will bid you adieu. Jump back to the last page. We can cut out. That's all my contact info. You got any questions, give me a call. Send me an email for the slides. Thank you for the time.